Welcome back. I'm Pratap here. Today is the 3rd September 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel, here you may find a tab related to community or posts. So whichever the tab you see, either community or posts, click on the tab, then you will get access to this post. This post is having a YouTube playlist link that will take you to all the training videos. Just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. So far we have completed 24 training lessons. And from all these 24 training lessons, we have released 62 training videos. So you need to start your training program from lesson 1.1. For that, you need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from the video description, please join at our Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other important updates we will provide at our Telegram channel. Now let's continue with our analysis discussion. Yesterday we identified 3 high liquidity zones. And in that one of the high liquidity zone is ACC. ACC already we discussed yesterday. You can refer yesterday high liquidity zone video. There already we got a trade here. Near to the zone with some entry buffer, we got the trade. And today morning session, the prices started from the zone. This is today's morning 9:15 candle. So prices, it opened from the zone. If anybody would have kept orders in this zone, your order would have been executed. Actually, I have seen exactly in the 9:15 candle, I was observing the market and the price stayed in this zone for around 3 to 4 seconds here. After that, sharply it came down, and after that, it reached this 15-minute zone. And this 15-minute zone was created later. But this is the one, our initial target zone. Yesterday also we depended on this 15 minutes target, but this candle is created, this zone was created after prices reached into this zone. So finally it reached our target here in this candle. Just 1 rupees before this zone, again it started moving up. Generally you keep some entry buffer, generally 1 rupee or maybe 2 rupees, because this is a 2000, maybe 2 or 3 rupees before, generally you exit. That way we can assume this order is executed. Actually wick to wick, see, if I draw the zone, 15-minute zone, wick to wick, it's like reaching the target. See here in this candle it reached the zone. Oh, sorry, this is 15 minutes. Now let me move on to the 5-minute zone. See here it entered into the zone in this candle at 9:25, 5 minutes candle, it reached this zone. But here I have drawn 15-minute zone with the type 2 proximal. That's why you can see in the 5 minutes zone, you can see a little short before reaching, just 1 rupees short of reaching this target. But anyway, with this 1 rupees buffer, if you execute how much profit you get, already I executed that. But this is one morning trade, successful trade. But remember, many of your trades might not have been executed in this particular candle. Let me tell you the reasons. Most of the F&O traders, they place the order once the market starts during the intraday. Pre-market orders, many of the trading systems doesn't support. That is the reason number one. Some people keep GTT orders, but the problem is comparing F&O trade, mapping F&O trades with equity trades. It's not easy. These are some practical difficulties. But those who are keeping in the cash, you have the option to place pre-market orders. In the pre-market order, probably if you would have kept your trade somewhere here at this, because market is open here, maybe some of your orders would have been executed. The reason why I am saying at this price, the market stayed almost 3 to 4 seconds, it stayed here. Those who kept the orders below probably might have executed. And some people don't trade at 9:15 candle. For example, if I am sharing my personal experience, many times or almost all the times, or I can say 99.9% of the times, I don't trade in the 9:15 candle. There are some practical reasons why I don't. Sometimes prices will open and sharply move. Sometimes some freak trades will be there, like they are like false trades due to some defects in the systems. When so much of trades, previously also once I explained about freak trades. Excuse me. So due to the reason, that's why those people, whoever is keeping trades after 9:15 candle, you will be missing this trade opportunity. But our high liquidity zones point of view, it has provided an opportunity, and again it turned into a successful trade. You got an entry here, and up to here you got the profit. This is a successful trade. So this is one point you have to observe. And after that, what happened? This zone is violated because prices went almost deep inside this zone. And then there was some resistance for some time here in this zone for a few minutes, but finally this zone was violated. See, from here prices came down, again from here it moved up, it reached this 5-minute zone and again sharply came down. Here I need to tell you about here we have a 5 minutes drop base drop. 5-minute zone is there. This is not the fine-tuned zone. You don't have any 15-minute zone here. Let me show you. There is no 15-minute zone in this area. But why I have given importance to this? Earlier analysis I didn't talk about this because I have my own, some of my own concerns about this zone. How the concern was resolved, let me tell you. See, here you have a drop base drop. See, prices came very close to this zone. And see the rejections. Even here, just touched and came down. The order flow, how strong here. You need to understand based on these rejections. And also here, before this zone creation, prices reached near to very close to this zone, and after that sharply they came down. That means they might have added a new order flow in this area, but still some confirmation. Today's 5 minutes candle helped me. This is the candle. I am not really sure, to be honest, I am not really sure how strong the order flow here, the recent order flow. But today, after seeing this candle, my confidence on this particular zone is built because see, very sharply it came. I've been observing here. Let me show you 1 minute zone, you will get clarity. Here sharply it came down. And then again moved. Now it is a confirmation that definitely there is a strong order flow. Again prices retraces, we should not miss this zone. That is what happened here. Why so many concerns about this zone? Because this is not the fine-tuned zone. That is the reason number one. Reason number two, if at all if you want to take a trade, that should be aggressive trade. Aggressive trade, price action clues should support us. Definitely here some price action clues in this area. Before going, it is pushing the prices, but I am not sure here because the movement is very excuse me, because the movement is very small here. That's why I have some concern. I know that there is a strong order flow, but I have some concerns, some doubts in my mind whether how strong it will be. Just touched the zone and came down. And the second reason why I have seen some interest, next time again prices entered into this area. At the time, the fine-tuned 15-minute zone was created. So at the time before entering into this zone, so prices again sharply came down. This is one clue. Still my confidence level is, to be honest, okay, I am happy with this. My confidence level is not, but this is good enough to build some confidence. But still I have some concerns about this zone, whether really to accept the trade or not. But today, after seeing this candle, because this zone is violated, then generally when this zone is violated, definitely this zone would have consumed some of the existing demand. See here in these candles, it consumed the demand. This is the first entry today morning 9:15. It pushed the market near close to this 15-minute zone. Second time when again prices came, there was some struggle here. There was some struggle. That means some of the demand this zone might have consumed. After that, in this candle, see here, came very close. It didn't touch. Sharply pushed it down. Again 1, 2, 3, 4, 5, 6 minutes, 7 minutes time it took before reaching into this zone. And this particular moment, at least it created some impression. I got some confidence that definitely this zone is having strong. There is nothing wrong in planning a trade. Moreover, risk is also within our limit. And sharply. And what about reward? Reward is, this is the zone. This was the zone. The reason is this zone was not completed at the time planning the trade. The initial plan is on this zone. But what happened after that? 15 minutes after we took the trade. So our trade is executed. At the time this candle, see, it's a very sharp rally candle from here to here. But this 15 minutes candle was not completed. After that, sharply it pushed the prices. Now candle is closed. Still, even though it looks like a failed ERC candle, you should not consider this is having good body, enough body to confirm this is a leg out. And moreover, it is a ERC candle, a very big candle, having sufficient body to confirm. So that's why this is a drop-based rally. Drop-based rally, a new zone is created. See, at the time we took the trade, this candle was not completed. Maybe probably the prices would have come down further, come down further, come down. If it would have closed here, it would not have been a valid 15-minute zone. Because a candle cannot be closed inside the zone, the leg out candle. It should be closed outside the zone, and it should be ERC candle, and it should be having enough body to accept this candle. All the conditions it is satisfied. So now it became a new 15-minute zone. So that is the reason why we have adjusted our target. Earlier this was the target. Now it is the new target. But actually it reached the earlier target. See here in this candle, it reached the earlier target. Maybe you would have got more profit if you would have used a trailing stop loss. I will show you the trailing stop loss also. But in this candle, finally it reached the target. In this candle. Next candle, it further came down and then further moved a little up and again came down. It gave you the second target also. Those who really wants to take this target, you would have used 1 minute trailing stop loss. Let me show you 1 minute trailing stop loss. How it would have helped you take this second target in case. See here we have a drop, base, drop is there. And then again you have a drop, base, drop. If this would have been exited, if this would have been stopped out, you would have exited and booked the profit here. But after that it came down, prices moved up. Again it picked up the order from this 1 minute supply zone. See here in this candle, it picked up the orders. The zone was not violated. And after that it reached even the second target. And after that this 1 minute zone was violated with a rally, base rally. This one is violated. after reaching even this original target. Actually, this is supposed to be the original target. But anyway, this is the new target. Definitely, we will exit within this. Even in my calculations also, I have considered this area only. But those who would have used a trailing stop loss, maybe they would have got even more profit. That is what I am trying to tell you. Because you already learned the concept trailing stop loss. I have explained with detailed examples in our training program. Anyway, from here to here, this particular newly created 15-minute zone, how much profit it has given? Around 4,700 rupees. Yeah, 4,785 rupees profit it has given. Sorry, this is the first trade, morning 9:15 trade, 3.2% ROI. I am sure many of your trades would not have executed here. Those who have taken a cash trade, probably some of your trades would have executed in this. F&O trades might not have been executed at this price. But cash trade, whoever is doing intraday trade in the cash segment, probably your trades would have been executed because you would have kept some of your pre-orders in that area. And those who don't trade in morning 9:15 1 minute candle, probably you would have missed this trade. But second trade, everybody would have got this trade would have been executed. Whoever using what is that? Aggressive trade mechanism based on the price action clue rejections. This trade would have been executed, and after that sharply it reached the new target. After that even it reached. Okay, up to the first 15-minute zone, it has given a profit 4,515. Probably if this is the one, you would have got a profit around 5,000 rupees you would have got. But anyway, 4,515 till this this 15-minute zone. And ROI is 3% ROI as per one futures margin cost. So this is the ACC. Today it gave 2 successful trades as per our software point of view. But whether you got both the trades or only one trade, it's all depending on your trade approach and the methodology used, and whether you placed the pre-market order at morning 9:15 candle. But second one, definitely it would be successful trade for all those who looked for this aggressive trade. If you might have missed this in your analysis, you might be missing even this. Because the last time when I fine-tuned this zone, I didn't explain about this particular zone to you. Those who are purely depending on my analysis, you would have missed this trade, a successful trade. And next one is M&M Finance. M&M Finance is again a daily high liquidity zone. Sorry. This zone was created on Wednesday, 5th July. And those who are using trading view, probably the data, 5 minutes data is not available. Because 5 minutes data is not available, you would not have taken a trade in this zone at all. But what I did last time, from our supply demand zone chain, identified the 5-minute zones, and then I have drawn these 5-minute zones in 15 minutes time frame, just adjusted those zones according to our software results. So at that time, I already explained how I fine-tuned previously. So that's why I am not explaining fine-tuning this zone. Please refer the previous video. I think 2 days back or 3 days back, we have discussed about this particular trade. We are in the 15 minutes time frame because 5 minutes data is not available here. That's why using M&M Finance supply demand zone chain, we have drawn these zones. At the time, we identified this as a 15-minute zone suggested by our software. See, remember, currently we are in 15 minutes time frame. So in 15 minutes time frame, by looking into our software reports, we have drawn this 5-minute zone. Actually, this was a high liquidity zone. With the gap down, prices came down. This is a fine-tuned zone inside this 15-minute zone. And also you have again Here you have another 5-minute zone available here, the fine-tuned zone. Within this 5-minute zone is there, and prices didn't touch this zone earlier. See the rejection before entering, prices came down. That indicates there could be a strong order flow in this area. Today they are failed, that is a different story. But in general, such kind of trades we will get a very good profits. And next, one more 5-minute zone. Here we have a 5-minute zone is available. This is a 15 minutes time frame, so you don't see exact leg in, leg out. But as per our software, we have drawn. Software provided low and high of these 5 minutes. So at this low and high, I have drawn these zones. And moreover, this zone is the lower time frame zone as a responsible for the creation of this higher time frame. See, this entire 15-minute zone created based by taking the order flow. See, after that it gave several tests. See, before the zone creation, this zone was already tested. After the zone creation, again it picked up the orders, and again see how it pushed down. Again after that, once again, it again pushed the prices down. After that again, it went, pushed the prices. So last time the prices went deep inside here. And today they are violated. Because one day this zone has to be violated, one day. So previously it went deep. Probably the order flow is very weak by this time. And today it is violated. Not only this zone is also acted like a high liquidity zone. Because multiple times it is tested this zone. Based on that, we can say this could be a high liquidity zone. And the second thing is, this 5-minute zone is also acted as a lower time frame zone as an horizon to the higher time frame. This 5-minute zone is the horizon to this entire 15-minute zone. So that's why it supported multiple tests. So those who wants to try, they could have tried today. Maybe your order would have been stopped out. But today, before this is stopped out, it already gave enough opportunities. In all these opportunities, you would have got the profits earlier. You means whoever traded on this particular zone, on that particular day, 1 year back, they would have got multiple opportunities. They would have got multiple trade opportunities, and profits also they got. And today's trade is stopped out. This is what you should understand. Because clearly also I told you several times, every high liquidity zone will be having some expiry period. All these days people enjoyed the profits in this zone, and today it is stopped out, and we have to accept that. But remaining two zones are not like that. They are powerful zones, they are fresh zones and fine-tuned zones, but they are stopped out without any test. So that's why we have to consider both these stop losses. It will impact our performance statistics. So M&M, the first one, it has given 2,000 rupees loss, and a negative return on the investment is 1.5%. The second one is 7,000 rupees loss it has given, which is negative ROI 0.5% it has given. See here, when we get the losses are very minimal. See, both the trades together we got 2,700 rupees profit. But here both the trades together we got 9,300 rupees profit. Previously also we have seen in all these stocks, whenever we get the losses, they are minimal. But whenever we get the profits, they are big profits. This is what we should observe. So this is about M&M Finance. And next one is Burger Paints. This is also daily high liquidity supply zone. And how I fine-tune, let me explain. See here you have a rally base drop. This is what our software identified. Did I make some mistake here? Just a minute, please. Sorry for my mistake. It is not a rally based drop. Sorry for my mistake. This is a drop based drop. Oh, I got confusion here. So, sorry. This is the drop base. See here. This is the hidden candle. I was wondering, because if it is a rally based drop, I would have drawn the zone up to here. The zone should be drawn up to this. Like this I have to draw. But I didn't draw the zone like this. The daily zone I have drawn like this. All of a sudden I was wondering, actually this is not a base candle. Many times we will get confusion. See, even today, several times I taught this concept to you guys. Today I got the confusion. This is a drop candle. You may ask a question, how can it is a drop candle? See, the hidden gap. Previously the zone was closed here and it opened here. See, the drop. The prices from the previous close, the prices were dropped. So this is the hidden candle, hidden body. I already explained about hidden body in our training lesson 9.3. Those whoever completed our training lesson 9.3 and 9.4, you have learned about the concepts hidden body and hidden zone concepts. They are very, very important concepts. So that's why our software has perfectly worked. Software is taking care of all these issues. Maybe as a human we made mistakes sometimes, but machine didn't make any mistake. Machine told this is a drop candle. That's why this is the only one base candle, drop base drop. So that's why I have drawn the zone only between these two candles. I mean between this one candle I have drawn the zone. So this is the leg in candle, this is the leg out candle, in between you have a base candle. And this 75-minute zone, this daily zone, I fine-tuned with 75 minutes time frame. So changing the time frame to 75 minutes. Here in the 75 minutes, you have a rally candle, two base candles and a drop candle. This also looks like ERC candle. Okay, sometimes we can compromise. I accepted this as a base candle. That's why rally, two base candles and a drop candle. This is the 75-minute zone. The moment I go to the 15 minutes time frame, I didn't convince any 15-minute zone here. Still this is a ERC candle, base you would have drawn, but this entire price area is already violated. Because recently prices entered into this zone. At the time this zone was violated, but it was created a new 15-minute zone. So here a new 15-minute zone was created. Rally base candle and a drop candle. Rally base drop. This is a small base candle. This is the way I have drawn a 15-minute zone here. Because of this huge big candle, all these candles are turns into small candles. But that's why I am hiding this candle. Because this is the problem with the trading view. Now you got the clarity. The moment I zoom, you got the clarity. Compare it to the other candles. This is a bigger candle, so rally. This is even much more bigger. This is a drop candle and this is the base candle. And also one more 15-minute zone also identified here. Actually it's not, this is the one. You have a rally, 1, 2, 3, 4, 5, 6 base candles, and with C hidden body, this is a drop candle. Earlier identified here a 75-minute zone. I didn't explain about this, right? So let me explain. Here we have a rally, two base candles and a drop candle. So we have a 75-minute zone. Within the 75, we fine-tuned with this 15-minute zone. We have a rally, 1, 2, 3, 4, 5, 6 base candles and drop. Actually, this is not really a base candle, but okay, some extent I compromised and drawn, because anything wrong, 5 minutes we won't be finding any proper 5 minutes fine-tuned zone. So 15 minutes I compromised and drawn the zone. Here. So the moment I went to 5 minutes, you will see a very bad structure because of this candle. Let's go to the 5 minutes time frame. And you see here, 5-minute structure is not at all good. We have a drop, we have a rally, in between there are no base candles. And earlier candles, if you want to see, 1, 2, 3, 4, 5, 6, 7, 8, 9. You have 9 base candles, rally, base, drop. So this is not a valid 5-minute zone. The maximum allowed candles are 6 candles. That is what you learn in phase 1 training program. So that's why this zone will be violated easily next time when prices are entering. But here 5-minute zone I have drawn. You have a rally candle, 1, 2, 3, 4 base candles and a drop candle. Let me hide this bigger, you will get clarity. See? You have a rally, 1, 2, 3, 4 base candles and a drop candle. But instead of drawing like this, actually we have to drop to here. That means entire 15-minute zone risk is it is handling. That's why what I did, type 3 proximal entry only I am planning. If prices come here reverse, we miss the trade. But if they are entering into the zone, the risk is minimal, we can try. Or risk allowed, so add some stop buffer before, add some entry buffer before this, if the risk permits. So that is the reason why I fine-tuned up to type 3 proximal entry. The highest body, this candle is having highest body. So till the distal line we have drawn type 3 proximal entry I have drawn here. This is the trade plan. But today prices didn't enter into the zone and we didn't get any trade opportunity today. Anyway, this has to be violated. After that it will enter here. We are not planning any trade in this zone. I am just explaining you why it is not a qualified zone. I am just explaining you guys for your learning point of view. So this is the one planned for the trade. So these are the 3 high liquidity zones we identified. Hope this information will be useful to you for your further study and analysis. Let's all meet again in our next video. Thank you.